Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. Hope everyone's doing well and happy happy Tuesday to everybody. All right, so we're going to take a look at a couple things in this post CPI environment, and I think audio should be good everywhere. Yep. All right. So we're going to take a look at what's going on in this post CPI environment and the best way to decode what's going on with any kind of inflation data, jobs data, growth data is to take a look at these target rate probabilities over at the CME FedWatch tool. Nothing has changed for March. That's not even where the question is as to whether or not we're going to get a quarter point hike. That's set. Although I will say this was up in the 90s. And so we're actually very unlikely to happen. This would be a quarter point hike, this tallest column to the left. This column to the right, that's rather short, but grew a little bit, which tells you the mindset of what's happening with rates. There's a tiny possibility. So if anyone starts to exaggerate the possibility of a half point hike, it is most definitely an exaggeration. And so remember that if we have this quarter point hike baked in, then what comes in May? Another quarter point hike. And then what comes in June? Another likely potentially quarter point hike, which would take us to 5.5 to 5.25. 5.25 to 5.5. Now, what's really interesting about what June looks like here is that we continue to see the ongoing debate, if you will, via the Fed fund futures as to whether or not we end up at this higher, more hawkish probability. And then once we sort that out, which by the way, gang, whether it's 5 to 5.25 or 5.25 to 5.5, it's not a market killer. What becomes the tricky part is when do we get our first cut? And that's where do we hold for the remainder of 2023 and then cut early 2024, or do we see a cut, say, by December becomes the question. Remember, the market's a forward-looking animal. It's a forward-looking mechanism. We're going to say, all right, we're going to get this many hikes, but then when, Federal Reserve, are you going to cut? And that's the game, all right? And that's what every single high-impact event like this really just boils right down to. All right, speaking of high impact, what else do we have today other than that? Here we go. Other than the CPI, now we get just a parade after about 11 o'clock. We start getting the parade of Fed speakers: Logan, Harker, Williams. I always recommend checking out a couple different calendars because sometimes Trading Economics might have speaking engagements that we don't see on Forex Factory. Sometimes Econo Day might have some minor FOMC speaking engagements. So know when these people are going to start getting in front of the mic. All right. So with that being said, let's take a look at where the data landed, because there's a few places, and I'll get a lot more into this when I see you all in the rooms shortly. But let's go ahead and get into some of this. And the question now becomes, all right, how do the markets respond? And while we saw a crazy wick, right, at the release, it really hasn't done a whole heck of a lot. It's probably a little weaker than I'd like to see, after that data and after what we're seeing on the Fed fund futures. But when you look at the daily candle and you look at where we sit, we're just below the previous session close. So maybe some mild bearishness that we're going to inherit in equities on the open. What about the long bond? Actually, the long bond's holding pretty well, which means yields are staying low. Remember, ZB moving higher, TLT moving higher means rates are generally heading in a lower direction. And then finally, the dollar. How do we look at the dollar? Gang, the best way to look at the dollar minus the noise of the other 5 currencies in the dollar basket is right here. As long as the euro can keep its traction to the upside, which we can see here on the daily. Sometimes it's really easy to get lost in the wicks of the 5-minute. or even the hour, which is my preferred short-term swing trading time frame. When you look at that daily, things get a lot clearer. Okay, we're still above yesterday's high. This is generally weaker US dollar. All right, so with that being said, let's go ahead into, and I'm going to just give everyone a reminder because this is coming up. If you haven't already penciled it in, maybe time to put it in with pen. February 23, 8 p.m., I'm going to talk about what I've been doing this year. A lot of you have already seen it if you're in the mastery or if you're in the futures room, what we're doing with the 1 hour, what we're doing with market structure, what's going on with macroeconomics, and how are we trading these short-term swings. All right, so let's go ahead and kick off our questions. As always, first come, first serve. Phone lines are open for your requests. And I see Brett has a question here. May I ask about GDX? Of course. Is this a put buy now or wait for a pullback to short the rip? Or too early to tell? All right, so Brett, before we get to GDX, I would say let's get a read on GC, right? So if we have interest in XLE or OIH, I'd want to get a read on crude oil. Same way I want to get a read on gold. I'm actually not bearish gold, so it's very difficult for me to be bearish GDX, right? And even though, and let's take a look at our, there we go, layout with the trend. GDX is neutral. Do you see that? Look at the daily time frame here. Let me move this chart up a little bit. Do you see the chart to the right? Look at the market structure. It was bullish. Now it's neutral. I like a buy near that 200. In fact, I'll probably jot that down for today's session. GDX nearing the 200 propulsion. So I'd still be quite bullish. So I'm not looking for short the rip because that would require a downtrend. So there's nothing really there for me in that regard. All right. Oh, you know what? I realized I kind of jumped ahead inadvertently on the questions. My apologies. But yeah, thanks for the question. Hi there. Hey there, Christopher. Good morning. Looking at S&P. Sure. Would this morning's extreme high low 8:30 a.m. be a factor for support and resistance throughout the day? It oftentimes is, Christopher. It won't be the support and resistance that I'm focused on. You know, when it comes to the S&P, I might also look at the support and resistance here on the 1 hour. So where I'm looking for support and resistance, let me get my drawing tools out here. All right. So let me show you what I'm looking at. This zone here would be support. Oop, I didn't mean to use the arrow. There we go. This right here would be support. This would be resistance. And I'll be looking for, look at the 1 hour as well. It's an overall uptrend. So this is possibly by the dip. But yeah, I would look at those levels for support and resistance. The other thing that I would look at, and you're talking about the high of 41, call it 41.86 and the low of 41.32. If we can see volume at those levels, if we can see that there was some volume levels that were in play there, I would say, yeah, it would make a lot of sense to consider that. But I want to see what kind of volume levels remain behind after that 8:30 wick to the up and downside. All right. Okay. So that is what we have there. All right. So let's see. I'm trying to think if there's anything else on this chart. Well, you know, I think also, Christopher, let's keep an eye on the previous session close, right? Let's keep an eye on the previous session close. All right, next up is, hey there, Stacy, 6.4 in CPI. I believe 6.2 is expected. You know, I will tell you, Stacy, I'm not really concerned about what the number was or is or anything. I'm looking at the response. So I think a lot of times people say, Ron, what did the number mean? And my answer usually is, I don't even know what the number was. So, you know, remember, the number is there to give us a way to discount what's happening in yields and dollar and the indices. And it looks like the indices are taking a little bit of a move to the downside, nothing crazy, but they continue to trickle lower, as you can see on the 5-minute chart. And again, if you ever start to lose your bearing and you get a little too caught up in the short-term time frames, definitely step out and look at the 1 hour. Definitely step out and look at the daily, and it will bring a little bit of perspective. It'll slow things down, right? You've always heard good athletes slow things down, and I think there's a lot of credibility to that statement. Slow things down. For us, we can do that quite literally by looking at a longer term time frame. All right, next up is hey there, Christian. Tides before boats. Absolutely. Structure dictates strategy. Follow the trend, manage your risk. This is the way. Absolutely, Christian. Absolutely. I cannot wait for season 3 of The Mandalorian. Speaking of this is the way. Well, you got it. I love it, Christian. Great message first thing in the morning. All right, FCX. FCX. Sure. We are watching FCX. Wiley, I'm trying to remember, looking at my notes. FCX was something that I think we have on the radar. We traded that one earlier, back at the beginning of January. And I'd love to look at getting into it again. We're probably looking at, let's see here. Yeah, we're probably looking at, and I'm looking at my notes. I can't remember if we looked at them yesterday or last week, but I'm looking at a minor low, potentially an oversold minor low. It's just a price pattern. It's just a 3 or 4 candle price pattern, and I'll be watching that one pretty carefully. All right. From our free trading room, Kat is asking about Airbnb, thinking about shorting it pre-earnings. So earnings, Kat, are not a setup for me. Earnings are just a volatility event, and I'm not a big fan of playing the actual release. I like either the ramp up or potentially the ramp down into earnings, but structure dictates everything. And so as far as Airbnb would go, I'm not allowed to short this. I might look for the aftermath of the hot zone. So there's our earnings event. And I might look for the aftermath of the hot zone, meaning if Airbnb gets sent down to 107, to 103, 102, that area, that would potentially be a buy because Airbnb is in an uptrend on the daily, and I won't use that very binary event. I actually hate earnings season. It's like a pebble in a shoe, right? I just assume not have to deal with an event that really doesn't usually change anything about the general trajectory of a stock. It adds a lot of volatility, adds a lot of confusion sometimes, but usually you're not going to see an abrupt longer term shift in the trend after earnings, just a lot of noise sometimes. So if we can capitalize on the aftermath here, that would be a buy. I would not fade this. That's not my strategy. That's not my, so it's not that there may not be one, but it's not something that is, in this case, validated by structure. All right, so we covered FCX, covered Airbnb. Thank you so much for the questions. And again, if you haven't already saved the date, February 23, short-term swing trades, daily price movement ranges. What are we doing here in 2023? Where we can start to open up. And it's been 6.5 months since we've been as busy in the overnight holding trades, anywhere from a few days to a few weeks. It's been about 6 months since we've had the clarity we've needed. We're finally getting it. Thank you, macroeconomics. Thank you, emerging trends like Airbnb. All right, next up is, what are my thoughts on PFE for a long, or its sector friends? Jay Charles, I like that. Or its sector friends. So PFE means XLV Healthcare. Pfizer's still in a downtrend, but like you said, let's go take a look at its friends. All right, let's jump on over to XLV here on the multi-chart. This is where we have a relative performance comparison of the heavily weighted stocks within an index or within a sector, and we can really look at them in one glance and get a feel for, all right, what's weak, what's strong. Pfizer's in a downtrend, so no long in Pfizer for me. No, no long in Pfizer. Pfizer, Johnson and Johnson, and Amgen on the daily. A big cup of nope. Thermo looks really interesting. AbbVie might be really interesting, and even XLV itself. Merck would be interesting. It's going to move a little bit lower than where it is right now. So, Jay, when I'm going through the list, of course, I'm looking at the trade flags for structure because, as Christian said, right, our philosophy in the mastery is structure dictates strategy. Strategy dictates indicators. And if you get that order right, more often than not, you're going to find your setup is in tune with what the market is communicating. The next thing I'll look for is which stocks within this, including the sector itself, is above the 200 propulsion. And that's going to be what I'll consider the bullish side of price action, the bullish hemisphere. So imagine that 200 is an equator. Are we above or below the equator? That's another great place to start. All right, next up, Alex, how are you? Thanks for simplifying my day trading by color coding everything. Alex and everyone, I don't know if y'all can tell, but I've been wearing glasses and pretty thick ones since the 4th grade. And now I've got the added benefit of cataracts in both eyes. I need things color coded, right? But the wonderful thing about color coding, and Alex, thank you so much, is that, look, we know what a traffic light's telling us. Red means stop, green means go, and yellow means speed up. I'm kidding. Yellow is caution, right? So if I can take that we're already programmed to see color and associate and assign a meaning, we know those colors are associated with something. Why not do that with our charts? Because then my biases and even my misreads are going to be far, far fewer because the color is what it is, or the dots are there, or the lines are there. The more we can automate the things that we know to do, for example, for me, the more I can automate, I can take 30 years of good, bad, and ugly and program them into the chart. That's what tech is doing for us. And we're going to talk quite a bit about that on February 23. What is it that I've automated that increases accuracy, increases speed of analysis, and decreases learning curve? Because now the indicators are there. The gauges are telling you, what's going on. So yeah, I appreciate that. I know if I see all 3 color grab in a 5 minutes, stay away. That's a really great one. Skittles. I call it Skittles. Too many colors. Too many colors. I love it. I love it, Alex. Thank you so much. All right. Next up is, bear with me here. Am I still using Bookmap? Sergio, I have it. I don't use it a lot. I really don't. It was something that I looked into when I was doing more volume work. It is a cool tool. It's right now something that I'm not incorporating on a regular basis, but I do have it. And what do I think about it? I think it depends on what kind of trader you are. And if you're the kind of trader who wants to be more of a scalper or really needs that very granular level of volume, it's fantastic. I use different volume tools and they complement each other, but I try to keep it a little simpler. And that's where I kind of go back and forth with it, right? I love the folks over there at Bookmap, by the way. They're really good folks. All right, ZM. Hey there, Neon. ZM. And let's see. Choppy market. I don't have much here that's really lighting up for me. Neon. I'd love to say let's buy it off the wave, but I don't have a trend. I'd love to say let's focus on oversold or overbought, but we're in the middle of the stochastic. I don't have a lot of clarity here. And maybe one of the most important things about trading is simply being able to say, you know what, I don't have a setup yet. I won't force something, but we'll keep an eye on it. All right. Okay. Last 2 symbols before we wrap up the show. Crude oil. I don't have anything here yet longer term. Cynthia, I don't have anything longer term, maybe intraday, but nothing shaping up right now on the daily. I'll have to see what the morning brings. And last question of the morning is Google. And that is possibly a buy. Yeah, Google might be setting up a possible buy down here in this 94, 95 area. It could very well be. And the closer we can get to the DPMR, that may or may not be necessary, but an oversold Google buy is definitely something that I would focus on. Well, definitely to the long side, and I would definitely use an oversold indicator for that. All right, gang. As always, thanks so much for being here for Charts and Coffee. Thanks for bringing in your symbols. Those of you that come to Charts and Coffee, if you're a member of the Mastery, if you're a member of the Futures, and you have more tech-oriented questions or instruction-oriented questions, or you need a little bit more time, like we do for our 2-hour double header this morning, ask the questions there. As always, those are welcome. We're going to be day trading for the first hour in our mastery and in the futures room. And then we're going to transition after 10:35 to something a little bit more long-term. What's going on in the 1-hour charts? What's going on in the daily? Because those time frames are finally opening up to opportunities. So we'll day trade till about 10:35, look at longer-term setups after that point. So our big double header, Tuesdays, Wednesdays, and Thursdays. All right, gang, be good to each other. I'll see you tomorrow, same time, same station. And I'll see you on the 23rd. All right.